The swap US Dividend Equity ETF, the SCHD, is widely recognized as a top-tier dividend-focused ETF. It tracks a market cap-weighted index of 100 dividend-paying US stocks, ensuring that only the best firms with a 10-year history of consistent dividend payments are included. This makes SCHD not only a great option for dividend investors, but also a reliable one. In this video, we will take a closer look at the SCHD ETF and my price prediction for 2025. And this will help you decide if SCHD remains a solid investment choice or not. Because let's be honest, in today's market where ETFs are being popping up like mushrooms after a rain, it's more important than ever to choose wisely. Because any ETF, such as the S&P 500, can be overly concentrated in specific sectors like technology, which currently makes up more than 30% of the S&P 500 index. And this is a problem because this concentration can make your portfolio vulnerable to sector-specific downturns. For example, if the technology sector faces challenges, the overall performance of the S&P 500 could suffer significantly in performance. But first, if you enjoy videos like this and want to discover smarter and faster ways to build your wealth, even if you are not there yet, be sure to subscribe to my channel and stay up to date. Secondly, the stock market in 2024 is challenging because investors are fighting with high interest rates, inflation, national debt, etc. And therefore, many investors are worried about a potential recession in 2025 because of the great returns over the last years, right? This is the reason that SCHD offers stability. It has a significant allocation to financial institutions, healthcare, and consumer staples, for example, what are traditionally seen as safe holdings during downturn markets. And while SCHD may seem to underperform compared to technology heavy indices like the Nasdaq 100, this is primarily due to its lack of exposure to tech stocks. However, this sector diversification ensures that SCHD is not overly reliant on one industry, making it more resilient in volatile markets. SCHD mitigates this risk by maintaining sector caps at 25% and rebalancing its portfolio quarterly while reviewing its overall composition annually. And this structured approach keeps the fund diversified, reducing sector-specific risks. Additionally, SCHD consistently offers a dividend yield between 3 and 4%, which is notably high for an ETF that also delivers significant price appreciation. The key attraction of SCHD isn't just its high dividend yield, it's the fund's ability to grow its dividend consistently year after year. And this combination of capital appreciation and dividend growth is what sets SCHD apart as one of the best dividend ETFs available. For over a decade, SCHD has delivered double-digit annual total returns, making it a standout choice for investors seeking passive income. And unlike the overhyped passive income claims of marketing gurus, SCHD allows investors to put their money to work. And this is actually generating income without ongoing effort from your side. And therefore, its strong historical track record provides a reliable benchmark for future performance. Now, let's dive into the SCHD price prediction for 2025. Based on data from 102 Wall Street analysts offering 12-month price targets for SCHD holdings, the average price target is $31.17, with a high forecast of $36.91 and a low of $25.86. And considering the current price of $29.35, this represents an average expected price increase of 6.2%. So the formula to calculate the percentage increase is predicted price minus current price divided by current price, multiplied by 100 to get the percentage of 6.2%. But here's an important part, what you cannot forget. The predicted increase reflects potential price appreciation over the next year. However, SCHD offers more than just price gains. Its dividend yield, averaging around 3.5%, contributes to the total return. Therefore, combining the predicted price appreciation of 6.2% with the dividend yield of 3.5%, investors can expect a total return of approximately 9.7% in 2025. And in comparison with SCHD performance over the past decade, SCHD had a 10-year annualized return of 11.5%, and the performance since inception is 13.3% per year. While the predicted returns are slightly below historical averages, SCHD remains a strong performer. And despite the optimistic outlook, it's essential to keep in mind that predictions are only predictions. And as an experienced investor helping over thousands of investors to grow their wealth smarter and faster, I've personally experienced and learned that trying to predict the market is foolish. If we could really foresee market movements or consistently select the best performing companies, we would see investors that are consistently outperform the market. But that's simply not the reality, right? Many professionals charge high fees for services that promise a sense of security, claiming they can exit the market before downturns will happen. But I've seen personally that these costly strategies rarely, or even better, never pay off. We are not able to predict the market, and that's precisely why ETFs have gained immense popularity in recent years, right? ETFs offer excellent diversification, allowing investors to benefit from exposure to high performing companies while keeping costs low. And this creates an efficient, cost effective investment strategy where your money works for you with minimal effort, making successful investing accessible to everyone. The only thing what you have to do in these times is buy and hold a successful ETF, and your money works for you 24/7 of the time. And for that reason alone, I think SCHD could be a great addition to your portfolio. One, it's a reliable dividend income with annual growth. Number two, diversification across sectors to mitigate your risk. And number three, strong historical total returns that align with long term wealth building goals. So while SCHD could be a good solution, some investors prefer a balanced 3 ETF portfolio because investing can often feel overwhelming, especially with the uncertainty during market volatility. In this video, I will show you my 3 ETF portfolio that offers a simple yet powerful way to build your wealth the faster and smarter way by combining the strengths of different investment strategies. This balanced approach simplifies investing while maximizing your portfolio's ability to weather market changes and grow over time. See you in the next video.